Hello, everyone. Let's take a moment to look at the disclaimer. This content is for educational, information, and entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to show you how BTA analyze the markets, how we look at the markets, but nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. We are not going to get in at the exact bottom, and we're not going to get out at the exact top. But we will, we are going to make money in the middle. Okay, what I want to do now is just analyze and go over the major market indexes and what we're seeing right now. Okay, now, granted, we had our Bollinger Band strategy. We've been watching it for almost, I would say 3 weeks, almost a month now. And it did signal. Today was the pivot. Today was the pivot. And this is the day that it actually, today was the pivot. Today was the day it actually signaled the pivot, and the buy point was today on the Bollinger Band strategy. Okay, but we did not take the trade. Okay, earlier this week, it was starting to signal, but we said we wanted to wait until we get above the 8-week moving average, and that happened. Okay, today. For most of the major indexes, that happened today. But it's some key things that was going on today that made us decide to pause. It's better to be safe than sorry. We are middle traders. We're not going to get in at the exact bottom. We're just going to eat off the middle, but we're going to wait until it actually seems to be the highest probability of success. But right now, here's a daily chart of the Dow Jones Industrial Average, the actual index, right? And this was our first day rally attempt right here. Okay, now we had our first day rally attempt, and we have not gotten a follow through day yet in the Dow Jones. But what I want to bring to everyone's attention right away, let's maximize this so we can all see it. Okay? Let's maximize this so we can see it. Now, what I want to bring to everybody's attention, and this is critical, is this downward trend in 50-day moving average. 1, 2, 3, and we just closed above it today. 4. 4 days we've been hitting right on this downward trend in 50-day moving average. Here's the 21-day moving average right here. Okay? So we kind of squeeze between the 21-day, the 9-day moving average, and the 50-day moving average up top. Notice something about the volume. We haven't had an above average. These are the volume bars down here. These are the volume bars down here. This is the average volume line, the 50-day average volume of the average volume line, 50-day line of average, 50-day average of volume. This is the line that shows the 50-day average of volume. I'm sorry about that. Now, if you notice, we have not had an above average volume day since the follow-through day. That was the only day we had above average volume day, except for this big down day right here. All of these up days, okay, was on less than average volume. Low volume. Less than average. Look, now one day. Today was a strong up day. The Dow Jones closed up 1.38% on lower volume than the previous day and below average volume. Okay, well, that's not what we want to see. Okay, we don't want to see rallies on low volume. What is some of the forms of weakness? Distribution, breaking the key moving averages, gap down days, churning. What's number 5? New highs on low volume, rebound rallies on low volume. Rebound rallies on low volume. This is a rebound rally. We're trying to come off the bottom, very low volume. That is actually a form of weakness, okay? We don't want to see that. So, and this downward trend in 50-day moving average, let's see if we can get above that come tomorrow and stay above it. Look, Here's the high from yesterday. Yesterday's high is right here. We closed right at it, and we right on the 50-day downward 50-day moving average. Let's see if we can get above that tomorrow. It's worth the pause to us. It's worth the pause. We know we got the pivot on the Bollinger Band strategy. That's granted. We got the pivot. Let's see if it holds. Let's see if it holds. Okay? And let's see if we can get above that 50-day moving average. Now, here's a daily chart of the Standard & Poor's 500. Okay? The actual index itself. The actual index of the Standard & Poor's 500. And once again, today was a pretty strong up day today. We closed up today on the Standard & Poor's 1.96%. Okay, 1.95% today. All right. Now, look at the low volume. Volume well below average. Volume is well below average. Look, this is the average volume. Volume is well below average and lower than the previous day. Look at, since we had the first day rally attempt right here. This is our first day rally attempt right here on the 20th. Okay, right here on the 20th. This is our first day rally attempt. We had above average volume right here. The market has been trying to go up. It's been stalling lately right here. Okay, moving kind of sideways, right? Well, we have not had an above average volume day on an up day since then. Only this day was above average volume. It was on a down day. So the only above average volume day was a down day. Okay, there is no above average volume on up days, and the market has been trying to trend up. Granted, for the last 4 days, we've been moving sideways. We haven't really gone anywhere in the last 4 days. Okay, it's sideways movement. All right, so let's see what happens. Let's see what happens come tomorrow. Okay, the 50-day moving average, a downward trending 50-day moving average, is right over our head. Okay, we got to try to get above that. We can go right up to the 50-day moving average and get rejected. All right, so it's worth waiting. It's worth waiting as far as we're concerned. Okay, now let's look at the Nasdaq Composite. All right, here's the Nasdaq Composite, the actual index, the actual Nasdaq Composite index. Okay, this is the actual index, and look at the 50-day moving average. Look at the 50-day moving average right above us. It's a downward trending 50-day moving average. Yes, we found support at the 21-day. Okay, we got a good, powerful move today on the Nasdaq. A very strong, very powerful move today on the Nasdaq. The Nasdaq was up 2.79%. Okay, but look at the volume, below average and lower than the previous day. Here's the first day rally attempt. We have not gotten the follow through day on the Nasdaq yet. Here's the first day rally attempt, right? But the only above average volume day was a down day. Okay, above average volume. We haven't had one up day on above average volume. Okay, everything has been low volume. And today, such a powerful day, up the Nasdaq up over 2%, right? Almost 3%. The volume is low. Institutional investors, there's no institutional investors coming into market right now. They're not buying the Nasdaq. There's no institutional investors right now buying the Nasdaq. The institutional investors are going to show themselves in the volume. Okay, they cannot hide from the volume. If they were buying today, we'd have saw the volume. We'd have saw the spike in the volume. If they was buying today, we'd have saw the spike in the volume. Okay, so now let's look at, this is the daily chart of the IWM. This is the daily chart of the IWM. Let's expand it. Okay, look at the 50-day moving average. Look at this downward trending 50-day moving average. Okay, right here we got a downward trending 50-day moving average, and the IWM closed right on top of it. Closed right on top of it. Look at the volume though. Very strong update today for the IWM. It closed up almost 2.5%, 2.5% on below average volume and lower volume than the previous day. Here's the average volume line right here. That the line of the average volume price is 50-day average of volume. That line right there, the 50-day average of volume. Look at it. We're below it. We have been below it the whole time. Okay, so we closed up today. Very strong update on low volume and lower volume than the previous day. So institutional investors are not buying. Institutional investors are not buying this rally, because if they were, we'll see it. But now this is the key. This is why it made sense for us to wait, because we're right at the downward trend of 50-day moving average on the IWM. Right at a downward 50-day moving average. So look, if we can get above that and hold above that, then that's great. But we got to get above that. That can be an area where we get rejected. Look what happened last time. The most recent time that we got above the 50-day moving average was right here. Okay, look at this right here. We rallied up, hit the 50-day moving average, traded above it a little bit, and we collapsed. Got a leg down. Okay, here's the 50-day moving average right here. We're right on this downward trending 50-day moving average. Granted, it is curving slightly. Okay, but let's see if we can get above it tomorrow. For us, it was better to wait until tomorrow to see if we could get above the 50-day moving average. Okay. Let's see what happens and see if some volume could come into this market. Right now, we have no volume. That's telling us that large institutional investors are not buying into this rally, okay? But now, granted, I have to admit, the guppy is not looking bad. This is the Dow Jones of the guppy, all right? As you can see, the magenta line of closing prices has now gotten above all of the shorter-term green moving averages. They twisted, and they're trending up. Look at the green moving averages right here. They twisted, and now they trended up, and they starting to expand a little bit. The magenta line of closing prices had gotten through all of the short-term green moving averages, and now it's trying to break through the red longer-term moving averages. That's very constructive on the Dow Jones. We want to see that. If this magenta line could get up through these longer-term red moving averages and they start turning up, that's real positive. Okay, can't take that away. That's positive. So we want to see that. We want to see that. So that's looking good. Okay, now let's look at the Standard & Poor. Let's look at the guppy for the Standard & Poor 500. This is the daily chart of the Standard & Poor 500. It's a guppy chart, okay, right here, all right? So look at the moving averages, the shorter term moving averages, all the shorter term moving averages. The magenta line of closing prices has gotten above that. Now we're inside of the longer term moving averages here. This magenta line of closing prices is almost through it for the Standard & Poor. If we can get above that, that's great. So the guppy is saying that the trend is starting to improve, all right? Well, we know Lois has given us a long time ago, over 7 days ago, she gave us a signal for the launch of a new immediate upswing, okay? She said we was in an upswing over 5 days ago. But let's see what happened here. This is the Nasdaq, okay? This is the Nasdaq. Here's the magenta line of closing prices. This is a daily chart of the Nasdaq. It's guppy. Here's the shorter term moving averages. They starting to flip and they starting to turn upward. The magenta line closing price has gotten above that. And now we're inside of the longer term downward trending moving averages. Let's see if we can get above that, all right? If we could get above that, that's going to be great. So I have to admit, the guppy is showing a lot of improvement on the Standard & Poor, the Dow Jones, and the Nasdaq. It's no doubt about that. So the guppy is looking good. All right, this is our daily chart of the percentage of stocks above its 200-day moving average. Now, this is still not that great, okay? Right now, we at 21%, all right? If I expand this so you can see it, right now, we at 21%. So only 21% right here, only 21% of the total U.S. market, 21% of the total U.S. market is above its 200-day moving average, okay? We got to get back above 40. 40 is the red line. Anything below 40 is a problem. That's when you're starting to look at correction territory. That's a problem. Right now, we have coming out of the straight up bear market type of breath. Yes, extremes down here, low, less than 15%. That's extreme. But right now, we're still in bear market territory. We're still in correction, well deep into correction territory. Only 21% of the total U.S. market is above its 200-day moving average. That's not really that great. That's bad. Okay. So if this market is to have some teeth, and if it's gonna run at least back up to the highs of the inverted yield curve date, okay. Remember, our inverted yield curve date was right here, right, on the Standard and Poor's, right. That was on 320. Let's see what that was. 329. Okay, and we had a high of 46.37. So I'm talking about we're going to go up another 500 points basically because we have 4,100. So from 4,100 to 46.37, okay, that's another 500 points easy. All right, that'll be the high of the inverted yield curve. Well, I've been saying that I think the market is going to go back to those highs. But when is it going to go back to those highs and how it's going to make it there is another story. But as far as the breadth is concerned, if we're going to go back to those highs, we got a lot of stocks that got to show some improvement because only 20% of the total U.S. market is above its 200-day moving average. Now, here's the Standard & Poor's 500, the percentage of stocks above its 200-day moving average. All right. Well, it's slightly better, but not that much better. Only 34% of the Standard & Poor's 500 is above its 200-day moving average. Only 34% is right here. Well, here's the 40 mark. We're trying to get back up near 40, but we're still well below 40. 40, when we get below 40, is look out, correction territory. Things are think market might be going into correction. It's not looking good. Well, we're still below that level. We had 34% of the total U.S. market above its we had 34% of the Standard & Poor's 500 stock above its 200-day moving average. But we did come off of the lows of down here almost near 20%. So that's a little better. It's improving a little bit more, but it's still well below the 40 level. It's not really that great. We just got above this horizontal resistance area at 34%. We had 34.8. That's at 34.36. So we basically right around 34% of the Standard & Poor's 500 above its 200-day moving average. Now, let's look at the Nasdaq. The Nasdaq is improving, but only 18% of the Nasdaq is above its 200-day moving average. You see what I'm saying? Don't fear that you're gonna miss out on anything. That's why we call ourselves middle traders. We're not worried about catching the exact bottom, and we ain't worried about getting out at the exact top. We just want to eat off the middle. That's it. The safe area, the safety area, the middle. All right. Only 18% of the Nasdaq is above its 200-day moving average. That's not really that great. That's terrible. Okay. So it's a lot of stocks that got to do a lot of improvement in the Nasdaq. Now, this is something that's very interesting. Okay. And I'm going to go straight to this chart. Okay. Of the Nasdaq. Right. Now, today, the Nasdaq was up over let's see what the Nasdaq was. The Nasdaq closed up 2.69%. Get that now. 2.69%, right? The Nasdaq closed up, right? 2.69%. Almost 3%. Well, if that's the case, you see this little blue crayon line right here? See this little crayon line right here? That is at 150. See, that's at 150. See this little crayon line right inside of here? That's at 150. What does that mean? Up top here is the number of stocks above that hit new 52-week highs, okay? The number of stocks that hit new 52-week highs, all right? That's what's right here. This box right here, this histogram, or these bars going up, this histogram is the number of stocks above, number of stocks hitting new 52-week highs, Let's say that. The number of stocks in the Nasdaq hitting new 52-week highs, all right? So I hope I said that right. So I'm going to repeat that. The number of stocks in the Nasdaq hitting new 52-week highs. The histogram down here is the number of stocks in the Nasdaq hitting new 52-week lows. So we had a very strong day today. The Nasdaq went up 2.69%, almost 2.7%, almost 3%. The Nasdaq went up. Well, it's very interesting to me that only 32 stocks hit new 52-week highs, but 141 hit new 52-week lows. So even though we had this very strong up day today in the Nasdaq, it closed up almost 2.7%, almost 3%. But guess what? Guess what? Guess what? We had 141 stocks hitting new 52-week lows, okay? 141 stocks hitting new 52-week lows, okay? That compared to only 32 stocks hitting 52-week highs. Now, why is that blue line there? I said that blue line is at 150. The Nasdaq had roughly 3,000 stocks in there, a little bit more than 3,000 stocks. So 10% of that would be 300. So 5% is 150. So I got this blue line here at the 5% level. I want to know if as at least 5% of the index hitting new 52-week highs or 52-week lows. Well, today, almost 5% of the index hit new 52-week lows on a very strong up day. That's interesting. That's something to think about. Why is that? If it was such a strong day, why are we still getting all these new 52-week lows? Something to think about, right? Make you say, Make you say, That's what it make you say. All right. Now, our advanced decline differential chart. It is very strong. It's very powerful right now. If this continue to go up like this, I don't see how we're going to get the market going to collapse. If this continue to go up like this, right? So look at it. The green line is above the yellow and the red and is well above zero, and it's moving higher. We already generated our green arrow saying that it was a good time to buy, right? We generated our green arrow days ago. The only thing that we need to see is this 50-day moving average of this differential chart starting to turn up. Now, this is our indicator, right? You're not going to see this anywhere else on the internet, nowhere else on YouTube. I haven't seen anybody talking about this chart. Why? Because I created it. I don't know anybody else is doing it, right? This is our advancing minus declining differential invisible chart. Basically, we want our green line to be above the yellow and the red and get above zero. And we want the yellow and the red to start turning up. They're above zero. They haven't really started. The yellow started turning up. The red hasn't really started turning up yet. But we did generate our green arrow. And it's moving to higher. Well, that's good. I have to admit, that's good. That kind of movement is saying that this thing might have some legs. I'll be honest with you. That's good. Okay. So now that's good. That was the Dow Jones. Here's the Standard & Poor's 500. And we got somewhat of a similar picture, okay? Here's the Standard & Poor's 500. We got the green line above the yellow and the red, and it's above zero, okay? And we got the yellow and the red above zero, and they're trying to turn just a little bit, okay? But look at that green line. It's moving higher and higher, and we already got a green arrow telling us that we had the okay to start buying, that the breath was really coming in well. So this is a daily chart of the Standard & Poor's 500, advancing, declining, issues, differential, invisible chart. It's very powerful. It's very positive right now, and it's very powerful, but it's very positive right now for the Standard & Poor's and the Dow Jones. And the Nasdaq doesn't look that bad either, okay? I have to admit, the Nasdaq does not look that bad. I'm going to expand it so you can see it, okay? Look at the Nasdaq. It's not that bad. The green line is above the yellow and the red, and it's gotten above zero. Okay, you can see here, the green line got above the yellow and the red here, and now it's above zero, and it's moving up. The yellow is starting to turn up. We need the red to start turning up. The best signals, we got our green arrow right here, giving us the green light that we could start buying some stocks. But the best signal is when the red and the yellow line is starting to turn up. We're not seeing that right now. The green is moving very well, but we need that red. We need that red line right here to start turning up. So we're seeing the advanced decline differential invisible chart is telling us that the market can still rally higher. We're coming against some very strong overhead resistance now. That wasn't there, the 50-day moving averages and stuff like that, 13-week moving averages, stuff like that. We've gotten above the first one, which was the 8-week moving average, and we closed above that today. Okay, so that's good. tomorrow, but the volume just wasn't there. So let's see what happens tomorrow. But as of right now, it looks like we found support at lowest, okay? And we're gonna go into this. We're gonna go into that on the second part of this video. It's gonna be a part 2 to this. We're gonna get ready to stop this now. It's gonna be a part 2 to this. But we did find support. We did it earlier. We did a video saying the market was on the edge, okay? But we found support right at lowest, okay? Here's that 21-day moving average. We spoke about it on the video, right? Here was the high, the midpoint of the double bottom, and lowest was right there. So we found support. We traded right down to that, and we bounced. That's positive action. I have to admit, that's positive action. So Lois did a job. She held that support, okay? Let me expand that. So we're going to get into this on the next part. But as you can see, we traded right down, almost to the penny, all right, at 303.50. This overhead resistance area that we wanted to act as support. And the 21-day moving average came down to it. We traded down to it almost to the penny, and almost to the penny of lowest, and bounced. Okay, in a very strong upward bounce today, but the volume was not there. So we're going to get into that when we start analyzing the weekly charts and analyzing the daily charts with lowest. That's going to be in part 2. So look out for part 2. We're going to end this here now. Look out for part 2. That was the breadth indications and looking at the indexes themselves. Okay, we see what we up against. All right, we got low volume, good strong movements up today, low volume. The breadth is good on the advanced decline line, the advancing minus the decline in differential invisible chart. The breadth is good, okay, but the percentage of stocks above its 200-day moving average got to improve some more. But in the daily, in the actual moving average charts, we got to watch the 50-day moving average on the daily charts, and the volume was not there, okay? So for the most part, it's improving, but it's not all the way there. Let's look at the weekly charts and the daily charts with lowest and the key moving averages and see where we at. It looks like we have to wait until tomorrow as far as we're concerned. Wait until Friday. See how this thing plays out, okay? So with that being said, look out for part 2. We're going to stop this here now. Look out for part 2.